Okay, we're back again. So let's do another back test on another trade. All right, this is volatility 10 1x index. Okay, so and this space between here is the space of last week from Monday to Monday. Okay, as time goes on, I want I want to first make sure the edge is gotten clearly and understood. Then as time goes on, I will be posting after this month, after the first 1 month, I'll be posting um what do you call it? I'll be posting analysis for the week, not just doing back test now. I'll be posting analysis for the week. I think I'll do one back test, one analysis thereabout. So, but let's see how it goes. Okay. Yeah. So as at last week, we're here. This is a daily time frame, so I already drew out my zones, the highs, the lows, where markets consolidated for a while, but this was the last low. Understand this. This was the last low. Okay. This trade is a bit tasky because even me, when I saw this trade, I almost didn't take the trade again, but because I had to leave the market and come back for a while, then I then had to see the other direction of the market. I had to see market in the other light because this one would actually like pick you away somehow and but no fear. Markets go on you, but don't be afraid. All right, let's go. So at this point, this was the last low. So if there was any break of structure or yeah, that we'll be expecting, it has to be below here and which market did it. So market gave us our first low. Let me take this off. Let me take this off. Yeah, so market gave us our first low plus our first high, which is between here, here, yep, between here and here. Yep, between here and here. So when market broke below this point, came down, make this low point here, then that is now our range. So we would be expecting market to sell from anywhere here. So on daily, this was the other block on daily, the place where we would expect market to actually sell off from, right? So, but something happened. Let me put this back. Yeah, so something strange happened. Okay, let me put the other block first. Let's look at the other block first. I'm shifting it here because I want to. I'll bring it back. Don't worry, I know it's too extreme to the other side of the chart. Yeah, change this to black. B1. Okay, so this was the other block we'll be expecting on daily. So on Monday, market got to that other block zone. On Monday, market got there. Then on Tuesday, market invalidated it. Do you see what I'm showing you? If you look closely, I think I should raise this thing up from here. Yeah, I should zoom in from here. If you look closely, you see where the other block is. Let me just increase it a bit. Yeah. You see where this other block is? Yeah. This is where the other block is. This is where the other block is. So on Monday, it got close to the area, but it didn't take it out. But on Tuesday, it took out that area, right? So it has invalidated our other block. Now, we would not likely be looking for a sell anymore, at least not in this area, right? If you wanted to look for a sell, maybe it's consolidated and it has broken a high. So maybe we'll look for the last, remember I always say this in the last one, the last other block that took out the low, which is probably this one. No, this is Yeah, no, I wouldn't call that another block. This is another block. This is the last other block that took out this low, right? So we'll probably be expecting market to come all the way here. So, but since it has invalidated this, our bias may likely now become a buy. It has invalidated it, but it hasn't broken off this. There's no break of structure here yet. Maybe not in this time frame, but let's say in 4 hours. So in 4 hours, right? Remember, it has been invalidated. Look at the even 4 hours other block was cleared. This one too was cleared. Like it was cleared, right? So we're not looking at this daily no more. Now we're looking at where in 4 hours did we have a break of structure or a change in character after this whole push broke down here. A change in character will come above this level. So I like to use the body, like I said, I like to use the body to determine my change of character areas. So let's say, yeah. So this was where market changed character, not here, but here. So this move from here to here was what pushed it. Now, the last other block before the break of structure or the change of character is on this particular sell candle. So we would put other block here. We'll put the other block here. Okay, that's 4 hours order block. Remember the rules still apply. Okay. Mm, and you ask me which rule, this rule here. Okay, still applies. All right. So on 4 hours, we now have a new trend, a new trading range, which is between here and here. This is our new trading range on 4 hours. If it breaks here, it doesn't mean it's not still bullish. It is still bullish, right? But I guess it's trying to, on 1 hour, on daily, it's trying to push to break a structure there on daily. Okay. So the weather is kind of cool today. It rained earlier. So, all right, let's go. I want to make this larger. Okay, that's fine. So on this is the range of the distance that we have, of the other block of 4 hours that we have. This is the range of our trading. This is our trading range. Now, we need 2 to 3 rejections from this. I will show you this. You can also enter this trade on 1 hour, but I'll show you the 1 hour earlier entry. So 2 to 3 rejection after the break when it gets into the point. This one, there's no trend, so it's just close by. So you could also take it. So there's something we have something like a shallow retreat. In fact, this is not a shallow retracement. I wouldn't say this is a shallow. It's like half of it because if you use fibs to check it, it's like half of it. Yes, so this is like 50%, not even 50%, like 75% retracement on the price. This is like 75% retracement on the price, man. Mm-hmm. You don't forget. So this is like 75% retracement all the way down here. If I'm doing this, I didn't use all my full fib. So yeah, I didn't use all my full fib. Yeah, so you see, yeah, it's like 75% if you cut this into half too. It's like 75% from the top to here. This is the 50% line. This is like 75%. This is like the golden zone for most traders. Let me put in the golden zone. Golden zone is here. Yep. Is that it? I don't even know. Bro, this thing, man. Okay, so you see what I was saying? This is like 75%. This is half of half. So this is like 75%. It came down to almost 75%. So for most traders who know about premium and discount zones, so market is actually in the discount area. Okay. Market is actually in the discount area at this point. This is the premium, this is the discount. Market is in the discount area, but I don't think a lot of other traders too break it into half. I know a trader that I follow that break this pair into half. So, yeah. All right, let's go. Let's leave Phipps for now. I don't want to waste time on this. Um, so we have the first retracement down, rejected. Second one down, rejected, and the third one, which didn't get there, rejected. Okay. So remember these things to apply. So if you go down, if you break it down to 1 hour time frame, I think I need to go back to 4 hours so that I can fix this thing properly. Yeah, if you take it down to 1 hour time frame. Yes. So in 1 hour time frame, we are inside the trading zone of the 4 hours. Now, inside this trading zone, our range is still there here. So within this trading zone, where could we put as our, where could we say, okay, this is our point of entry, but I'll show you. Now, after market had broken structure, right? Remember, this is the broke of structure line or change of character line, right? Market started coming back down. If you notice, market trended down from here, created a low, created a high before it came down to this level of the 4 hours, right? So market trended down to that place. So what we have in this structure is that once there's a trending structure to the other block of fair value gap zone, wait for a break of structure to trading or traded direction. So either you wait for a break of structure or you look at one of those signs that I told you, the two rejection, or 2 to 3 rejection or candlestick rejection pattern, a sure one like a morning star or evening star that close below or above the full structure of the candlestick. Okay. So this is one of those times that you see something like this. So, but first of all, where is our area of interest? We have multiple areas of interest. We have for 1 hour, we have this other block here. We have this other block here as our area of interest, which it tapped, right? Now inside the other block, like partially inside the other block, we have a fair value gap here. This is a fair value gap. So I'll be using the pink for fair value gap and the green for other blocks. So see? So this either way, you're still good. Either way, you're still good to go. Do you understand? Either way, you're still good. Either you're looking at it on the other block. But what I like to do, since the other block is kind of covering the fair value gap area, I just use the other block. The tap on the other block and rejection is fine for me. But regardless, you can still use the what's this? Uh-huh. Yeah, you can still use the fair value gap here. So on 1 hour. So market came, touched, this was the trend that I told you about. So, but the last part, we have this rejection after I tapped the high or the low of this other block to take it up. But then there's a formation of this reversal candle here that close way above the full structure of the reversal candle. This is a Morningstar reversal candle. It closed way above here. So on 1 hour, you could trade on this first leg to buy it, right? It's confirmed. You can trade on that first leg to buy the market, and you probably would have gotten your 1:2, 1:3. Put your stop below the structure, right? And what did it give you? See? It's a 3.3 pattern. But then on 4 hours, you can still wait for the third leg. If you look at that third leg, this is the third leg, this first leg, this second leg, this third leg. If you look at this third leg here, you will see what happened in this third leg here in 1 hour. After the second leg came in, remember, 4 hours time frame, we're waiting for 3 different rejections. This is the first rejection here, second rejection here in the same 4 hours order block. The third rejection is this one we have here. And if you look closely, the third rejection did this. It did this, gave you a candlestick pattern of a head and shoulder, a shoulder, a head, and a shoulder. You see? So it did all of that and later closed here. So you could take this as well as your third leg of the 1 hour and trade this, your low, your shoulder, your head, and your shoulder, but this is inverted. And you take your trade here as well. So here that you're taking your trade, this is 8 o'clock in the morning on Friday, on Thursday, rather, 8 o'clock on Thursday. So if you are taking your trade here, you put your stop loss below the structure. Below the structure, I would have put my stop loss below here though. This would have been where I would take my stop loss. If you wanted to take your 1:3, this gave you a quick 1:3, but it gave you a quick 1:4 rather. So if you left your trade open, see the same path, the same place, 8 o'clock on Thursday. If you check 4 hours, you see it's probably the same place of the entry of 4 hours. You see? The same third leg, first leg, second leg, first rejection, second rejection, third rejection. See? The same area of entry, same 8 o'clock. So if you had left your TP open, you probably would have been as high as 11, 1:11. 11. So whatever you're risking, it's 11 times of it. So that is the backtest for volatility 10 1x index. Okay. So I'll see you guys in the next backtesting video. Like, follow, subscribe, and drop your comments. Let me know what you think. If you have any bias to this, you let me know. But if you have any questions too, you also let me know your questions. I'll reply you. You can either drop your comments and I'll go through the comment and drop a reply, or you drop me a message on my Instagram at Josh FX Pro. Then I'll give you a reply, okay? All right. For now, see you in the next video.